Mike spent 30 years building his HVAC company from a one-truck hustle to a business that had steady contracts, 5 crews, and 7 figures of annual revenue. Along the way, he picked up a rental portfolio, a cabin up north, and a warehouse that he leased back to his company. But he built all this without setting up an estate plan, so when he died unexpectedly, his wife and his kids were scrambling because they could not access his frozen bank accounts. They had court filings that they could not figure out. They had nearly $100,000 in legal fees, and they had a business that they didn't know how to operate or run. If your family would be in a similar scenario when you pass away, this guide is for you. Whether you plan to pass your business down to your kids or sell it for retirement, your personal and your business assets need to be able to avoid the probate process, protect everything from creditors, lawsuits, and taxes, keep the transition smooth for heirs and your employees, and prepare for incapacity, not just your death. This guide is a step-by-step structure for how to set up your estate plan for someone who owns an HVAC company and rental properties. The foundational piece here is going to be a revocable trust. If you think of your estate plan as a layered approach, the revocable trust is going to be the base of that, which will make all of your assets avoid the probate process, and you can control how those assets get distributed out to your beneficiaries. The things that you're going to put inside of your revocable trust are going to be your home, your rental properties, or the LLCs that they are in, your HVAC company, bank accounts, investment accounts, and personal property that you want to pass down. This will also include a pour over will, which captures any assets that you forget or don't have time to put inside of the trust. It includes a medical and financial power of attorney so someone can make decisions on your behalf in the event that you become incapacitated, and it includes a HIPAA release so that your family can access your medical records. The reason this matters is that in the event that you become incapacitated and you do not have these documents, your family will have to go to the courts and petition them to be able to have the authority to make decisions on your behalf, whether it's medical or financial decisions. The next thing we're going to do is build out the asset protection with a layered approach of LLCs and an irrevocable trust. We're going to break this out into 2 sections. The first one's going to be for the HVAC company. The second one's going to be for your rental properties. Now, with the HVAC company, we're going to set up an LLC, taxed as an S Corp, so that you reduce your tax liability. And you can consider transferring your LLC membership interest into an irrevocable trust if you're concerned about your personal liabilities. This would be things like divorces, lawsuits coming after you, or creditors coming after you. And this could be for car accidents, debts you have, or personal guarantees that you have provided. And then for your rental properties, you would put those in separate LLCs. That way, if a lawsuit comes after one of those rental properties, that lawsuit is isolated to that single LLC, and it will not wipe out your entire rental portfolio. And then you can put your LLC membership interest inside of a revocable trust if you only want to avoid the probate process and have control over how those assets get distributed. Or you can put them inside of an irrevocable trust if you want asset protection for the LLCs from any of your personal liabilities. Step 3 is going to be creating a business succession plan for your HVAC company. Now, you've built the company up, it prints cash, but who is going to take over that business in the event that you're no longer around? Now, if you're going to sell the business, you want to draft a letter of intent or a formal buy-sell agreement with a trusted employee, a competitor, or another third party who wants to make the purchase. And then you can fund the agreement with a life insurance policy so that your family gets paid in the event that the sale is triggered by a death or a disability. And if you're going to keep it in the family, you want to create operating instructions which should give your kids guidance on how to manage that business, anything from taking service calls all the way to managing vendor relationships. Then you want to start training the successor as early as you can, whether that's one of your children or a top technician inside the company. And then you can consider gradual transfers of ownership so you don't give them the business in a lump sum and trigger a huge tax bill. Now, here's a tip. We consistently see that contracting companies are going to lose 50 to 70% of the value of the company when the key player passes away and there's no succession plan for the family to take over. And then we can set up a life insurance trust. This is optional, but it's a powerful strategy. A properly structured irrevocable life insurance trust is going to solve multiple problems at once. The first one is that it's going to keep the death benefit out of your taxable estate. It's going to equalize the inheritance if you're trying to pass the business down to one kid but not the other ones. It will provide liquidity in the event that your kids have to pay estate taxes, pay off your debts, or buy out a partner. Now, the life insurance is not a requirement, but it is going to help with the management of the assets and how those assets get distributed so you can more cleanly pass them down to your family. Step 5 is going to be leaving instructions down to your family on how they need to be managing all of these assets, including the business, the rental properties, and maybe that cabin that you have. Now, this is seemingly super simple, and most people will forget to set this up, and so when you pass away, your family won't have any access to any of the assets that you have. They won't be able to get into them, and they won't know how to manage them. The first thing that we're going to do is create a letter to your family. It's going to explain who to call, how to handle things, where to get started, and how they should approach all the assets that you're going to have. And they're going to have a maintenance and operation binder for your business so that they will know who to call for vendors, maintenance, relationships, bank accounts, etc. So they know how to access everything and who to call no matter what the situation is. And then a digital assets memo, which will give them all the access information for your things like your QuickBooks, your CRMs, all the logins that you may need for that business. Without this, your family is literally going to have no idea how to access anything inside of the business. So even if they do take over the ownership of the business, they have no idea where to go. Step 6 is setting up smart tax strategies before it's too late. Now, if your estate is close to the federal state tax limit, or you think it's going to be in the next 10 to 15 years, it's smart to plan ahead on how to handle these. Some of the strategies that you can use to reduce your taxable estate is going to be lifetime gifting, family limited partnerships for the business or family assets, charitable remainder trust if giving back is part of your estate plan, apply discount valuations to your LLC membership shares to reduce your gift and estate taxes, harvest depreciation and cost segregation on your rental properties to offset income and reinvest the savings that you may have. And really that's it. If you want help setting up your estate plan, asset protection, and probate avoidance for your HVAC company and your rental properties, click link in the bio, fill out the form, and schedule a time to talk to some more on our team.